Welcome to the first of our two business tax videos. This is an area that is quite busy and there are a few things we need to consider. In recent years, the corporation tax playing field has been quite simple, with companies taxing their individual merits at a standard rate of 19%. We'd been promised that this rate would fall further, but the pandemic has scuppered that. The Chancellor announced an increase in the main rate of corporation tax to 25%, with effect from April 2023. Whilst keeping a small profits rate at 19%. By doing this, he has brought out of the cupboard two items that we haven't seen for some time: marginal rate relief and associated companies. I suspect Nigel will recall these areas well.
Thank you, my younger partner. Yes, there used to be some fun for us accountants, whilst our clients didn't really appreciate what we were doing. We used to apply these, I think, on profits starting at 300,000, the small company rate, and the marginal rate existed up to levels of 1.5 million, I think.
Yes, that's right, Nigel. Unfortunately, those levels of generosity have not been granted, and the new scheme sees the small company rate applied on profits up to 50,000, and the main rate of tax coming in at 250,000.
Okay, do the associated company rules apply as before?
Yes, I'm afraid they do. So if there is a group structure or companies under common control, the limits of 50,000 and 250,000 are divided amongst the group or commonly controlled companies, which means that you might not be making much profit before they apply.
I can remember us planning to use up these allowances of such companies, legitimately, of course, to keep the tax charge to a minimum. What sort of costs are we looking at the moment?
So for a company making a profit of £100,000, they would currently have a tax charge of 19,000. Under these provisions, that level of profits will be at marginal rates, an increase to 22,750, an increase of £3,750.
Cool, that's quite a blow, isn't it, Craig? So the group situation will be worse.
Yes, afraid so. So if we consider a group of 4 companies, or maybe 4 under common control, where Company A has a profit of 100,000, Company B 75,000, Company C 35,000, and Company D break even in its first year of trading. Our first challenge is to work out who is marginal or small. Divided by 4, the small company rate band of 50,000 works out at 12,500 to each company. That's only relevant to Company D, who have no profit at all, so they waste the element of the band applying to them. The other companies are at least marginal, but because A and B are both over the 62,500, being 250,000 divided by 4, they pay tax at the full rate of 25%. Company C is marginal because profits are 35,000. The tax for these companies was 39,900, but has risen to 52,088, a jump of £12,188.
I can remember when we used to apply these rules before, it was a challenge to get the salaries to the right level in each of the individual companies, so they were under the small company band. But with the amounts being so small here, I can see it going to be more difficult. We also going to have to think about cost allocations, so the profits aren't too high in one company and too low in another.
Yes, that will still be the case, so there will be some more work with clients to help them understand the position.
Also, might make clients think about incorporation a bit more. There was an argument before that if individuals earn certain levels of money, they may be better off as a sole trader. That was especially true with the introduction of the new dividend rules and when corporation tax was 19%. It does follow that with an increase in the rate of 25%, this should be revisited.
I suspect you might want me to work those figures out for us, Nigel.
Yes, please, Craig, if you would. That's a very good idea. One better part of all this is the situation with loss relief. It's a long time since we could carry back losses more than 12 months under the current rules. Now we can carry them back up to 2 or 3 years, though restricted to £2 million maximum, which is quite a large amount. And if you did carry back 2 lots of 2 million, those extra years, at 19%, that could be worth £760,000 as extra tax relief if you're in that situation.
I think Nick's going to be happy with this.
Well, I hope he's not too happy. I wouldn't want many clients losing £4 million in a year, but I can see that it may happen occasionally. And it is useful to get the immediate cash relief rather than just a carry forward of losses, which is helpful, but it can take a long while before you use those up. This period of these new provisions is from April 2020 to March 2022.
So what is the position for those trading as sole traders or partnerships or even LLPs?
It's essentially the same, with one good beneficial addition is that the partners, the income taxpayers, each partner won't be subject to the limits, which will be pleasing for them. There are also some changes to the corporation tax losses when taken over by a new purchaser, and may be beneficial when looking to relieve those losses under new ownership.
Again, something that provides continuity and the opportunity to save or protect jobs.
Well, hopefully we've covered these items in sufficient depth and you've got your chart to look at how the new reliefs work. If you need to get in touch or would like to, please do in the usual way. Don't forget to look at Sean and Graham tackling the capital allowance enhancements and some other associated matters in the second business tax video to follow. Thank you.